Hey guys, good afternoon, everybody. It is Monday, July 11th. I'm going to set up this mentoring session real quick, and then I will send the link out to Alex to start our one-on-one session today. Thanks. All right, let me just get this all set up real quick. Take this ginger shot real quick. You guys know I got COVID, so good stuff. Thanks. Let me set up this room real quick and we'll get started with our mentoring session for today. This isn't the group mentoring session, guys, so just FYI. This is the one-on-one with Alex. So let me get this set up real quick. It's good. A couple more things here to update. Oh, weird. Let me go back real quick. It's like this one got kind of changed up. All right, there we go. So a couple more things here to update, and I think we should be good to go. All right, solid. Let me get this link sent out to Alex. There you go. All right. So I'll get a few minutes for Alex to make his way in. I'll send over the link, so he should be here shortly. Hey, Alex, how's it going? Can you hear me?
Yeah, I can hear you. How are you doing,
Awesome.
Sean?
Awesome. Doing great. How are you?
I'm doing well. Thanks for jumping on.
Yeah, definitely. No problem. So I'm not sure if you sat on any of these one-on-one sessions, but basically it's just a Q&A. So you can ask whatever you need help with, whatever you want me to cover, and we can clear up whatever confusion you have.
Sure, that'd be great. Yeah, so I just joined a couple weeks ago. I did watch a couple of the mentoring or the one-on-ones you did. Um, just a couple questions about just how long did it take you of trading before you're able to do it full time?
Gotcha. So I've been trading for on and off for about 11 years. I started trading like at the beginning of law school. I finished law school, I worked for a bit. So I was still trading every so often. But I didn't go full time until COVID. So COVID kind of gave me the opportunity to trade full time because the courts were closed. So my law firm went on like a temporary layoff. And then I went on temporary layoff during COVID and I basically never went back. So it kind of allowed me to take that leap because, everyone has that worry, like when they want to go full time where they're not sure if they should leave their career to go become a full time trader. I was kind of forced into it, I guess, temporarily, and then I just ended up continuing because I was doing so well trading full time. So I think I probably could have started earlier, but I had like such a, I guess, cushiony career and cushiony position working at a big firm where I didn't really feel the need to leave. So once I started making more money just trading, that's when it kind of gave me the opportunities to not go back. So um, I guess short answer to your question is I probably could have gone full time, maybe like halfway during my journey. So I've been training for 11 years now. So probably like maybe 6 years into it, I could have gone full time, but I just, I kept doing it on a side gig type work until I had the opportunity to really do it full time.
Like were you pretty consistent in those first 6 years?
So the first 4 years, it was horrible. I lost a lot of money during the first 4 years. It wasn't good at all. But the thing with me is I never paid for a course and I never had a mentor. So I kind of just learned everything through trial and error. So it took a lot more time for me to pick things up. Um, so I wasn't really consistent the first 4 years. I lost a lot of money those during that period. But after that, I started to catch on to like what was my trading style. So that's what I always try to tell people, like, don't force a trading style on you. Like if you want to intraday trade and that's what you like doing, then do that. If you like to scalp like how I normally do, then do that. It's really just finding out what works best for you because everyone trades differently. But in reality, if you look at other people's trading strategies, it's very similar. It's just people look for different things and they use different tools to identify basically the same thing. So for me, it took quite a bit. But then after my fourth year, I started to find some consistency. I wasn't very profitable, but I was consistent. The 2 years after that, I started becoming more profitable. And then the 2 years after that, that's when I started K2 as a community because I wanted to find, like I was looking for a group that traded together and like would help each other grow. But every time I joined a group, it was always a toxic group. I don't know if you've been in like other groups before where you'll join in and it seems like a good idea, but then people start like attacking each other and it's just not like really friendly. You don't really learn much there because you try to learn some and then you learn bad info from people who sound like they know what they're doing and then they really don't at the end.
Yeah. That's been really hard in the groups is trusting, aside from like some groups I found I don't even trust like the group leaders, like I don't believe they're trading real accounts and I think you're really transparent, which I appreciate a lot. Like you say you're taking the trades and you post your screenshots of your accounts, but some of the group leaders I've been in, like they're taking huge losses because they're getting these gains, but they're not posting those losses a lot of times. So it's hard to know who's if the group leader is like telling the truth in some of those groups and communities.
Yeah.
Let alone anyone else who's in there.
Exactly. Yeah. The thing with US 30 is that it's such a directional asset that if you find the bias and this is the whole issue with like other people in the group too, like you can really take a trade and set no stop loss. Eventually your trade will come back to where you think it's going to go. But trading like that realistically is really difficult because if you're trading with a fund company or a funded account, you can't let trades run forever. Like you have to have some sort of stop loss. So yeah, and then that's how I try to be. I try to be as transparent as possible because I know like, the trading space, there's a lot of, I don't know, I guess there's a lot of scammers out there.
There's a lot of scammers. It's like, I would say, at least from what I've seen, more scammers than not scammers. It seems like.
Yeah, exactly. And that's why I stopped. I used to do a signal service before too, but I feel like signal services kind of, they have that connotation of like scammer. So I stopped doing that and I'd rather do live training because I'd rather teach people. I'd want people to actually know what I'm doing and apply it themselves so that they don't need to depend on me, 24 hours a day.
Yeah. I would say, I don't honestly like you and Raja. I don't know. Do you know Raja?
Oh yeah. Roger Banks.
Yeah. Like he does trade live too. And he shows like real accounts and like I went to one of his, like a live session actually in London with my friend Peter, who's in this group too. And, he doesn't do signals either, but yeah, I think just the transparency I appreciate from both of you guys.
Yeah, no, definitely. Yeah. And that's pretty much what I try to put forward because I don't want people to get the wrong image or wrong idea of like how we trade here. Because I know it does seem kind of unrealistic sometimes when we're trading these funded accounts, but I try to stay as like aligned with everyone as possible so that you guys can try to mimic the same results, if not better.
So you only do all your accounts are funded accounts now?
Yeah, so I got funded with FTMO a long time. I've been with them for I think 2 years now. So I've been with them for about 2 years now. But in between, I had a couple issues because they kept changing the rules in the beginning, like when you could trade and when you could hold trades over the weekend and stuff like that, and trading during news and holidays. So like in between that period, I did lose a couple accounts, but it was mostly just technicalities. Like I would basically pass the daily loss by like a few dollars or so, or I would trade during holidays, which I didn't realize a holiday is considered a weekend because the market does close between a certain period. I'm not sure if you're familiar with it, but like US.
I heard you talking about it last week. I didn't realize that either with FTMO.
Yeah, I actually blew like a bunch of accounts doing that same thing. It was like 2 years ago. It was like on MLK. You're looking in the US, right?
Yeah, I'm in Vermont.
Okay, cool. So like Martin Luther King holiday. I didn't realize that that was like, I knew it was a holiday, but I didn't know the market was gonna close for like 4 hours. So that's the first time I blew like two accounts that were funded. And then there was another time, I think it was like Memorial Day or something, or Juneteenth actually this year or something. There was something like that. There was like another holiday that was new and it became a federal holiday and I didn't realize the market was closed and I ended up blowing like my accounts, but yeah, I made them back. But those
They wouldn't give you any leeway with like your trading history with them. There's just like no getting the account back without passing the challenge again.
Yeah, it's weird. They have no leeway at all. They're very strict at FTMO. I heard at other companies they don't care as much, but they also are not as reliable either. Like I think recently MFF's been having issues. I'm not sure if you use them.
That's the one I'm trying to pass right now. Yeah, with MFF.
Yeah, like I heard people talk about the issues this morning. I did take like a test trade off one of the variations, and I did see some lag time between the executions. They typically don't have many issues, but lately, for the past couple of weeks, they've been having issues. Like I think execution times, spreads been kind of wider, and there's some slippage every so often. But it happens. It's something that you can't really deal with. It's just you just have to go with it.
Do you think they're making most of their money from people paying for the challenges or from actual traders that win trades?
So for FTMO, I think they definitely do copy the trades. I don't think they copy them initially, but I think once you're consistent for like a month or two, then they start actually copying them. For MFF, I'm still wary about them because they're like, I'm not sure if you heard of this company before. I forgot what it was called.
That burned everyone like 6 months ago or something. I saw a bunch of people talking about that.
Yeah, funding talent. Yeah, that's what it was called, funding talent. So basically MFF became the next, well, they kind of went, like when funding talent went under, they kind of just took over and they kind of seemed the same because they made their requirements a lot easier than FTMO. They were basically luring like traders that wanted the easier way out to pass. So I'm not sure, but I think there's something up with MFF because I talked to other members in the group and they mentioned that a lot of them are having issues with withdrawals right now. Ooh. So initially, if they would do like under a 10K withdrawal, it's fine. But once they go over like 10 to 30K, like between that range, they start to really analyze each trade. They go back and review all of your trades because they're like, I don't know if they're like actually copying them. So they want to have a reason to basically not pay you, right?
Try to get out of it. Yeah.
Yeah. So I've never had issues with FTMO. That's why that's always going to be the only one that I refer to people. MFF is like a good secondary. I haven't had any issues with them myself. Knock on wood, hopefully not. But we'll see. But they're definitely like number two. I don't know any other funding company that's as reliable as MFF, but FTMO is always going to be number one.
Okay, that's good to know. And you can only tie 6 accounts together. Is that what it is? So
for FTMO, it's a max 400K. So I have two 200K accounts, and then for MFF, you can have a max 600K. So I have 3 200K accounts with them.
But can you, with the software, are you able, like, how come you don't tie like your personal accounts, or do you ever have any personal investors that would be willing to like back you essentially and do like a private staking of your trading?
Yeah. Actually, I used to do that before actually. So before I did FTMO and MFF, I used to do that with a couple investors, but then I felt like the risk was a lot higher and they would bug you more. It wasn't like FTMO where you can just you'll trade, and if you lose, you lose. You win, you win. When I'm trading for other people, like real people, they will bother you. Like they'll bother you all, because they'll have the investor account. They'll look when it's negative, or they'll look when it's in drawdown, and they don't realize that it goes in a drawdown sometimes. I mean, well, they do realize it, but they don't want to see that. So I started to not do that anymore. Also because of the whole legal issue with it, because you'd have to be licensed to trade or to actively manage accounts like that. And with me having the lawyer background, I don't want to lose my license doing something illegal.
Yeah, that makes sense. Who do you use for a broker in the US?
In the US, so depending on like the type of account, so before I used to use TD Ameritrade. TD Ameritrade was like my main broker when I used a regulated, but for unregulated, I used to use He Goes Way.
Because for US 30 and like gold, you have to use unregulated, right? For CFDs.
Yeah, for CFDs, they would have to be unregulated unless you wanted to trade the future, which would require like heavy margin, so it's kind of impossible to trade unless you have like a big account on a TD Ameritrade. Or you can also trade on, there's another, I think futures company called TradeStation where you can trade directly off TradingView.
Mm.
So you'd have to trade the actual future there too. I don't think the margin requirements as high on there. And I was thinking about doing that if I was able to copy my trading view to my MT4, because I wouldn't be able to do FTMO and all these other funding companies if I was trading directly on trading view.
Mm. But you just feel more comfortable using a regulated broker?
If it's a live account, like a personal account, yes. But with FTMO and whatnot, it doesn't really matter like what account.
Oh, I guess it doesn't matter because you're not using, you're using their account. You're not using a personal account.
Yeah, exactly. If I was using a personal account, then I would for sure use something regulated. If the account went over like 10,000, like whenever I trade on He Goes Way, I would like have a max of 10,000 because they would have issues with withdrawals too sometimes if it was too high due to like money laundering laws. Because you can't be withdrawing like 30K a month. Like, where's this money coming from?
Yeah.
Yeah, and it's coming from like a random country, so it's very like red flag.
It
so
is very sketchy.
Yeah, so when I was trading with He Goes Way, I would withdraw whenever my account went over like 10,000. So like say for the day, if I went to like 10,000, I went to 11,000, I would just withdraw 1,000, and then I would just keep it below that amount. So it was hard for me to scale because I never wanted to put so much money in the account and then not be able to withdraw at some point or get red flag, and then they basically blacklist your account, because I've seen them do that before. Like you make too much and they don't want to pay you, they'll just like,
oh my god, and you can't do anything about it really.
Exactly. And your money's just sitting there, or they just keep your money basically.
When you were using them, were they using crypto to pay out?
Yeah. I think they still do, don't they? Or I'm not sure if they.
Yeah, they still do.
Yeah, it was always crypto. So that's why it was always a red flag too, because sometimes you'd still send it to your crypto wallet, but then you wouldn't be able to withdraw it because the crypto company would be like, okay, where this crypto come from,
Oh wow.
Yeah.
Yeah, I gotta get some money out of there, I think then.
Yeah.
I'm with like Osprey FX, which is like He Goes Way, essentially, I think.
Gotcha. Yeah, I think it just depends. Or I think if you're doing like small amounts, it's not as risky, or it's not as like unusual if they're not going to flag it. But if it goes like above a certain amount, I think that's where they, their government, our government have to look into it, because they're like, where does this money actually come from?
Yeah. Okay. Well, that's good to think about. What was my other question? So what percent do you think you average now of your accounts like gain each month?
I probably do 10% probably on like a really, really good month. Like realistically, it's not that high. It looks like a lot profit wise, but because I'm doing a 200K account, it's not really that much. It's probably like, it's like closer to like 5% or less, depending on like how much I'm going for. Because I'm only going for like 1 or 2 trades a day. And sometimes I don't even go for trades for like the whole week. I'll go for like maybe 1 or 2 trades a week. So per payout, on a really, really good month, probably around 10%, but typically like 5% or less.
How come you don't do a higher risk percentage, like with your win rate?
I think for me personally, it's because I'm just so comfortable with where I'm at right now. And I feel like if I make a change, like if I just increase my lot size and the profit seems higher or the drawdown seems higher, it's going to throw off my routine. Eventually I'm going to increase my lot size and stuff like that. Cause I could take a bigger lot size. Like if I do lose a trade with a 10 lot, it's only a 3,000 loss with a 300 pip stop loss. So I can technically push it hard, like farther if I like. If I want to change it to like a 12 lot or a 15 lot. But I think right now with my consistency, I'm just pretty satisfied with where I'm at currently. Cause your mindset starts to change. Like say, for example, if I'm in drawdown, like $2,000, I'm like, all right, I might lose this trade, but whatever. If I increase my lot size to like 15 and then say, let's see, so 15 times, see if my drawdown goes from like, normally I'm at 2,000 drawdown. And I'm like, okay, cool. If my drawdown goes down to like 3,000 to 4,000, I start to freak out a little bit
Hmm.
because you're seeing different numbers. So I think for me personally, I'm in a phase right now where I'm kind of like brainlessly trading. You know what I'm saying? Like I'm not
Yeah.
really like thinking too much. I'm kind of just rinse and repeating every day, and I'm satisfied with what I'm locking in.
Your
Uh,
emotions aren't getting involved in it too much.
exactly, yeah. Because if the numbers start to get bigger, yeah, I'm gonna get more emotional. I'm gonna want to take riskier trades, or if I lose a trade, I'm gonna want a revenge trade and stuff like that. So at the moment, I think just because how the market's moving, like we are going to summer, so the market's going to be a bit slower. I'd rather not risk losing trades rather than going for those big profits.
Hmm.
Yeah.
But it seems like most of your trades you take are for 10 points essentially.
Yeah, it's because the market's been a lot slower and it's been a lot riskier. Typically, like during the spring and the fall, when the market's moving a lot smoother, because you've only been here for like a couple months, I believe. Like before, earlier in the year, I was taking a lot of the breakouts, like the full moves. So I'd go for the full like 500 pips and whatnot. But lately, I've just been taking partial moves because now I have more in multiple accounts. They kind of add up to more. Before, I just had the FTMO accounts and like one or two MFFs. So I was more willing to take bigger risk, but now that I have more accounts, 5 accounts, I'm able to just take 100 pips or 200 pips here and there, and then they'll add up to like a lot more.
Do you pretty much always set it to like your like 10 points and 30 points for the stop loss at like or 100 pips, 30, 300 pips?
Yeah. Typically, I have it automatically set to that. So right now, on my MT4, I have it set to 300 pip stop loss, 100 pip TP. And then after I enter the trade, if I think the trade's going to keep moving, like say for example, I'm looking at the breakout and I think it's going to keep pushing, I'll just drag my TP down lower so that I can just trail it a little farther down. And then as I do that, I'll move my stop loss and profit as well. So I'll kind of just manually trail it as it goes down. But if I think the trade's really going to go forward, like for example, today, the breakout, there was no bias in that direction. It was kind of doing the opposite. So for that, if I was going to take that trade, it'd be partial. But if that trade came for a sell, I would set my TP stop loss to 500 each way. So it'd be the full move. And then within that move, I would move my stop loss and profit. So it just
Okay.
depends. Like depends on my confidence in the trade, and if there's a lot of confirmations that are there, like the trend meter matches the biases in that direction, and it just looks like a smooth move. Then I would set my TP and stop loss wider, and then I would just trail it down with my with the stop loss as it continues to drop.
Okay. Because I think that's one of the hardest things for me right now is I'm not nearly as consistent or calm as you are when it comes to trading.
Yeah.
And I make a lot of, I don't know, it's hard to not make emotional decisions. And the problem is, and my win rate isn't as high. So like doing that 1 to 3 risk to reward, it makes me have I have to be like an incredibly high win rate to not like let one loss, basically one loss would rule out 3 wins or
Yeah, exactly.
cancel that out. So that's been like my biggest struggle right now is trying to what makes you like how did you decide on doing that risk to reward ratio?
Yeah, so the main reason why I have the negative risk reward is because of the spread. It's usually because of the spread and the volatility in the market. So if like we're gonna look at any entries over here, I think there was like a V3 that came up right here. Like sometimes it's gonna be really smooth. Like something like this right here is a V or a V1 actually. So for the most part, usually when I do set that or when I came up with that idea, it was really just to have a cushion back here. Because like sometimes, like we discussed, if you have a bias, you can literally just take trades in that direction and eventually it'll come hit your TP. So like you kind of just want that net there in case price wants to like bounce around before making its way fully to your TP. But even though I do see a lot of these entries, I mean, you'll see that a lot of these times entries will come up and I'll still not take them. So the way that I look at things to feel the most confident about it is I try to incorporate the trend meter. Well, obviously you can see the bias here was bearish because we had, I think today the sentiment was like, wasn't very strong, but it was still pointing for to sell. Yeah, 56 long. Fundamentals were like bearish as well.
Which do you usually rely on more? Because a lot of times they are opposing to each other.
Yeah, usually for the longer, well, overall, I try to look for the retail sentiment because I know that the fundamentals are going to push around a lot. So for the most part, I usually look at this for sentiment, and then from there, I'll look over at the fundamentals because you saw this morning, like this went from like 170 points on open and then went down to like 60 points because it had that big push initially. So for what I usually look at, number one would be the sentiment. I typically want it to be a lot stronger though. Like right here, it's not as strong. It's 56%. Typically want it to be about 60 to 65% or more higher, because that will just indicate that it's so lopsided that price has to come down back in our direction.
Is that what most professional traders do? They do the opposite of what the sentiment is?
I'm not sure if that's what everybody does, but I started to catch that pattern like really early on because when I started trading, I was like, I lose trades all the time. And I'm like, why would I lose trades? And I was to trade the opposite. So I would trade, well, I wouldn't trade the opposite. I would trade the opposite of what we're doing now. So if I saw this was like, let me see if I can find a pair here or something that's like very one-sided, like gold. So like, for example, gold here, it's like 80%, 87% long where everyone's buying. I used to trade that way where I would see it. I would trade where everybody was trading. And then I started to realize that, man, I keep losing trades. And then I would realize, if there's this many people trading in that direction and we're all losing, like, then the people that are actually making money are doing the opposite. So that's why I just put, two and two together and just use logic to understand that I should be doing the opposite of what everybody else is doing.
So you just came up with that on your own.
Yeah, pretty much. It was just, I lost so many times because whenever I lose a trade, I try to look at things to see what could have been done differently or what could have caused that. And this is the thing that I started to notice a lot. I was like, okay, when I lost trades, I was basically trading like everyone else. And I started listening to a lot of different trading books, and a lot of the greatest traders would always mention, don't trade like the sheep, like trade the opposite of them. Like basically the majority of people are the sheep, they're all buying here. And if you look at gold, I mean, it just wouldn't make any sense to buy because it's been dropping for, a long time now. It's been dropping for, see, June. It's been even longer actually. Yeah, so gold's been dropping since March 2022, March 8th, 2022. And if you look at the sentiment's actually been the same for like months. And it's been crazy. It just keeps adding because people keep trying to buy the dip. And I don't know, like the way I see the market is that it's so highly manipulated that of course people would buy gold because gold is it's a safe haven currency. If we're going into a recession, obviously people would buy gold, right? And I've seen like so many analysts telling people to buy gold and it just keeps dropping lower and lower. So it doesn't matter if like everyone's trading that direction and it would make logical sense to buy gold. The market really does whatever the whales and market makers want it to do.
Yeah. So the whale is kind of doing the opposite of the retail because the retail isn't big enough to drive the market, the direction of the market.
Exactly. Yeah. And then they'll lure them in sometimes, or like they'll drop price a bit and lure it up. Like they'll push it up for a temporary period. Like for example, right here, it'll probably just push price up for about 28 days, for about a month, right? Everyone thinks, okay, this is the shift where price is going to go up. And then as they have enough buyers there, they just dump price right back down. So it's all manipulation. I mean, that's the way that I see it. I could be right, I could be wrong, who knows? But from my experience and just from my analysis of how the market moves, typically, when I started trading opposite of everybody, that's when my win ratio and like my profitability went super up. So I just continue to trade this way. If at some point in the future it changes, I'll be able to adapt with the market. But I think for now and for the past couple of years, this has been working perfectly fine for me. So I think this is a good catalyst to identify, which direction to be trading.
That does make sense. And so, have you found the most success doing really short-term scalping trades?
Yeah. I've found most of my success doing short-term trades because the market's like so manipulated, especially right now. I think over the past couple of years, I started to realize it a lot more, especially during COVID. Like COVID was going on and the market was still going up, like with no point of it stopping. Yeah. And that's how I started to realize that, there's really a lot, like there's no way to really predict the market. Like the market will do whatever the market makers and whoever's really making money, like where they want the price to go. So instead of getting caught in these longer moves, because the thing that I used to hate when I would intraday trade or swing trade is when you be in profit heavily one day and then the next day something happens that just caused price to go the complete opposite and you're in just a massive drawdown. So you basically threw away all your profit and you're now like about to get stopped out. So I tried intraday trading for a while. Before, when I used to call signals, I would do intraday calls, and they were pretty good. Like they actually worked pretty well. But I realized that as the market conditions started to change, like we're currently in a scalping market, I feel. So I think right now that's probably what's best to be applied so that you can get in and out of the trades rather quickly, rather than holding on to a trade and then being in some profit and then it just reversing on you like an hour later. Yeah. And with US 30, the thing that I noticed too over time was that it moves in different phases, right? Like, I don't know if you've noticed it too, but typically we only trade from like 6:30 to 8. So from 6:30 to 8, I mean, today's probably not a good example because there's no direction, but this is usually the period that we trade from 6:30 to 8. And then typically from 8 until 9, I see a bit of 8 to 9 or 8 to 10. We see a lot of consolidation. And then from there it becomes market does reverse from there until close.
I've been noticing like kind of what you're showing. So 10, this is Pacific time we're looking at, right?
Yeah, Pacific time.
Like 1 p.m. Eastern time. So like, yeah, like 1%. It seems like it starts going in a trend outside of the trading time that we're doing in the morning where there's more volume, but it seems like a lot of like consolidation or trading within a zone, and then it breaks out and goes in like a real trend, at like 10 a.m. ish your time.
Yeah, exactly. Like before we used to call that the mid-market reversal. So typically, and we still call it the mid-market reversal, but typically like from 6:30 to 8, there's usually a direction. I know today was not a good day. It was just back and forth. But there's been other days where it actually does work out pretty smoothly, where it typically has a smooth direction from, I think this is probably a better example right here. This was on the 8th. So on the 8th, had a bit of a fake out right here. I think this was NFP day. So we had the non-farm payroll this day. It had like some manipulation on open, but then after that, it had its actual direction. So it has direction right here. Then from like 8 till I guess 9 or 10, some consolidation around this period, and then the mid-market reversal, which happened right here from like 9 up until 11.
Do you ever think that trading outside, like after the hour, in the after 10 a.m. your time, there's less news events and it has this reversal or like more of a real trend a lot of times? Like it seems like during the morning time when we trade, there's so many news events and things happening. And it seems to always be near the session highs and session lows. There's so many like volatile points that it almost seems to be like safer to trade later in the day.
Yeah, no, I agree. So that goes hand in hand with what I was referring to earlier with the market conditions changing. Before we like had these scalping strategies, we used to apply the daily strategy. That was like the only strategy we were applying like every day. I'm not sure if you looked into that strategy, but basically you're looking for just the first momentum signal after market open. So say for example, right here, market opens at 6:30, and we didn't even use any bias or anything like that. But so market open right here, you would take the first entry after market open. What's that? Daily entry. We would take the first valid signal, which would be this one right here. And then after that was done, we would wait until mid-market. And then we would take it again in the opposite direction. So we wait there, and then we wait until mid-market, somewhere around this area. This probably came a little too late. But typically, like how we just mentioned, market would go one direction initially. And then how you said, like later when there's no more news, price tends to reverse, and we would take it the opposite way. So before, we would only take 2 trades a day. We would take this for it was 1,500 pip move, take it with a small lot size, and just pretty much just set and forget it, let it run. And then we take the opposite trade in the other direction. But this is when the market's like not all choppy like how it is now. So this was like during COVID time. During COVID time, like market would go so smoothly because the economy was doing well. You could literally like, take a sell, not even think about it, and you'd win like eventually. And it was the same way with that following COVID. But then now that I think with the current like news events going on with like the war going, I think as soon as the Ukraine war went on, the market started getting kind of shaky. And then after that, we had the recession coming, making it kind of shaky as well, where it's not really moving as smooth. So it's a little more difficult to take trades like that, like how you mentioned, because you'll see that some days it'll move smoothly, some days it won't.
Mm. So you haven't been taking many of those daily trades anymore.
Yeah, not at all. I will mark them up and I'll follow them. And then what I'll do is like if we have a daily trade like that, I'll trade like within it. Like say for example, if we have one running, I'll be like on the 1 minute, and then my bias would be looking for any variations or anything like that within it. So I'll mark it up to like identify it and have some sort of bias, but I won't necessarily take it and just hold on to the trade. Because sometimes these trades, like if there's no volatility, especially during the summer, you can hold on to these trades for like days. There was this one time, I think last summer, we took a daily trade and we were holding on to it for an entire week. It was crazy. Like it didn't move 1,500 pips for the entire week for it to hit your TP or your stop loss. It just kept bouncing in between that range.
Wow.
Yeah. So the summer's not really a good time to take long-term trades like this because you'll see a lot of reversals and pushes back and forth. Those types of trades are good during like the fall, winter, and spring. I'm not sure if you're familiar with like how the seasons work.
I mean, I've been trading for a couple of years, but I haven't been doing US 30 solely. And I have like a company that I own. So I haven't been doing that. I haven't traded that consistently. So
yeah, the market's usually slow during the summer. It's typically because like all the bigger traders, like the whales and whatnot, go on vacation and stuff. So they don't really have we don't have their volatility all throughout the season. But I think because we're going into a recession, a lot of them are taking advantage of the market conditions. So a lot of them are still staying in the market. It's not as smooth as it was, I guess, like 4 or 5 years ago.
So your best seasons are usually anything but summer, would you say, or fall and spring when it's not around the holidays?
Yeah. So basically, outside of summer and outside of the holiday season is like the better time to take these longer trades, like intraday trades or trades that you want to hold on for a longer push. But during the summer and the opposite we just discussed, it'd be best to just scalp because it's better getting out of the trades rather quickly, or even scalp on a higher time frame. Like I've been looking on the 15 for trades where we can set and forget. And those have been working pretty good too, but I just need to test them a bit more because the conditions change like every month. So we're not really sure what's going to happen, especially with interest rates going up. I'm not sure if the market's going to keep dropping or if it's going to manipulate its push back to the upside. Because I think it's been dropping for a while. Let me check US 30 real quick.
Well, I mean, that's the goal, right? Of raising interest rates is that.
Yeah, because that's the only way that the government's going to get out of this recession because they're just going to have to people as much, and they just want to prevent unnecessary spending. But yeah, US 30 has been dropping for about since January right here. So on January 5th, 2022, it's been dropping. Looks like it hit its low here on June 17th, and now it's kind of just ranging. So this is kind of like an area where we'll see if price gets manipulated back up, but eventually it's going to come back. It's going to have to come back down. So, because we're not going to get out of this recession. We're probably going to be in this recession for like the next 2 years or so. So I don't expect this to really push up too high, but I do
need to come down more probably for it because I think a lot of times like the average recession comes down. I don't know, the stock market comes down I think around 30%, and now it's only down 20% or so, 22% maybe.
Yeah, exactly. It's not too far down. Let me see if I can measure it. Yeah, it's not even that far. It's not like 19%.
19%, yeah.
So it's still got a long way to go, but it's not going to be an easy push where people can just take sells and like automatically win. Unless you have like a crazy stop loss or no stop loss, then yeah, that would make sense. But I mean, I think it's still got a long way to go. I think it depends too, like, because so before we didn't have all these like crazy news events, like, we didn't have the Fed speaking every week. Like years ago, they would speak like once a month, but now they speak like every week. We didn't have inflation news coming out like every day, it seems now, compared to how it was last year. So the market is definitely changing a bit. It's just not I guess it's just not as predictable. And that's why I prefer to scalp rather than take bigger trades.
But so do you still think that trading, like with those things being said, because a lot of the news events and the FOMC speaking is uh, happening in the morning time? Like I know you have the group and everything to run, so maybe partly because of that. But if you were just trading on your own and you didn't have a group to run and have a live call, do you think you would trade later in the day?
Yeah, I would. Typically, I would. Yeah, I would trade all day. And that was a double-edged sword for me because the thing is, I used to make a lot more profit before, but I would also lose a lot more. So, if you're in the group like last year, I used to make like a lot more profit every day, but then I'd also lose. Like I'd probably make a lot of profit in the morning, and then I'd keep trading in Asia and I'd lose it all. And then I make a little more and basically make it back where I'm like, okay, if I didn't take all those extra trades, I could have made pretty solid profit. So with the way I trade now, I've kind of forced myself to trade this way because I'm more consistent. Because the thing is, if I don't lose as many trades, the profits just add up by the end of the week versus me going back and forth. Like if I have a red day today, I got to make that up tomorrow. And then I have a green day after that. I'll be in profit, but then I can lose all that on Thursday.
Yeah.
Yeah. So for me, it's more so about trading less and looking for more quality trades and just being consistent and really just not getting greedy. I think that's the main key. Because when
That is it's a very tough thing to do. To like if I am doing my like work for my company and then I trade in the morning, but then I keep trading view open and I keep looking at it, then a lot of times I'll take more trades and get greedy. If I've lost, I'll try to make it back. If I'm winning, then I get greedy and want to win more. And yeah, usually the more trades I take, the worse I do.
Yeah, no, exactly. And it's the same with me too. I started to have to come to that realization because what I would do sometimes, I would start to journal my trades and I'm like, wow, like all my trades literally came in the afternoon or after 8 o'clock. So that's why I just stopped trading during that period because I would have more losses during that period than wins. And then sometimes I'll get on a hot streak. Sometimes you'll find like a crazy trend, like you mentioned, midday, where it starts trending the opposite direction, where you can just keep taking trades in that direction and keep winning. It just takes like one loss to really set you back, especially if you're doing a negative risk to reward. It's just, I just find it not worth it because once you take that one loss, you want to make it back so badly that you'll revenge trade. And you'll maybe just force a trade that you think is there, but it's not necessarily all requirements met. And then you'll end up taking another loss, and now you're like in a deep hole.
Mm. Well, I'm wondering if it would be worth just trying to limit myself to only trade in the afternoon to like, so instead of allowing myself to trade morning and afternoon, just allow myself to trade afternoon only.
Yeah, you can do that too. I actually have I found like a lot of success in Asia session. I think it depends during the period because if you like measure Asia session sometimes it moves really fast. It moves just like it does during New York, and sometimes it's like super dead where you can't even catch anything. I'm not sure if it was moving fast lately. Yeah, I think like this period over here, this was the 10th. This was last night actually. It actually moved a lot during Asia session, which is surprising. So it moved a total of about, yeah, it moved almost 3,000 pips the entire session for Asia last night. And that was on a Sunday. So, I mean, you can try it if you want. What I would recommend and what I personally did for a while, if I wanted to trade during Asia, is I would take a smaller lot size. The reason for that is because the spread's a lot wider. So you might have to pull out earlier. You don't want to risk too much, or you don't want to. So I think the main thing with that was that you don't want to eat up your margin because if you take losses during Asia, that's going to carry over to the next day. So you can't trade New York because it resets resets at I think it resets at like 2 o'clock my time. So I'm assuming that's like 5 or 6 your time.
Yeah, I see what you mean. Yeah, so it would eat away at that.
Yeah, because you'll kind of like shoot yourself in the foot. Like say
Mm.
you have a bad Asia session, and then you see a great New York session, and you can't continue trading because you're already at your daily drawdown for the day.
Mm. Yeah, that's a very good point.
Or you can do two separate accounts. That's another thing you can do. There's another member in our group. She has like multiple accounts. So she has multiple funded accounts. And she's kind of worried to trade how I do. So she doesn't use the copier. She'll only trade two accounts at once. So she has six accounts. She'll trade two with me during New York, and then she'll trade two on her own during Asia. And then she'll trade another two that are just long-term trades.
Are copiers unreliable? Is that why she's afraid, or she's?
I think she's just afraid because she like I spoke to her today and she felt that the scalping was kind of getting to her. Like she was getting like a lot of FOMO, and because she is pretty consistent. She's one of our older members in the group. She's been with me for like years now, and she's been doing really well. But I think lately, because of the market, how it's been moving, it's just kind of been getting to her where she feels the need to like FOMO into trades and stuff like that. And I'm sure you probably felt the same way
Oh yeah.
if you've been waiting, if you've been waiting all day for like today, the trade I took today was a bit of a FOMO trade too. It was so close to the sessions, but thankfully it hit. Um, it gets to everybody. It doesn't matter
Yeah.
how you're trading. Your trade psychology will still get the best of you, even if you think you have all the boxes checked.
Yeah, that is what gets me every time. It's the trade psychology part of it.
Yeah. No, and typically I think that's why I would recommend people to go for like the smaller moves, like the 100 pips, because once you have like a couple wins under your belt, you're going to be more confident than you are without them, because then you'll expect the next one to hit. You just don't want to be overly confident, take one without
Yeah.
actually confirming everything.
Well, I guess I love the 100 pip moves, and I can hit them a lot. It seems like when my trading psychology, I'm not doing like stupid things like FOMOing in and stuff, but I'm just really concerned about that 300 pip stop loss, like that negative risk to reward. Like, is this woman that you just spoke of, is she doing negative risk to reward?
Yeah, she's doing the same thing. She's been doing the same thing for a while. But she also like factors in like other things. I think what a lot of people have been doing lately has been using a trailing stop. I don't use it myself because I'm not really comfortable with using it just yet. But one of the guys, I think I had a mentoring session with him recently. His name was Ross. He uses a trailing stop of 100 pips. So whenever he takes a trade, he'll either break even almost always, because if you ever look at the trade, it almost always goes in profit if all the requirements are met. So he'll either make it at break even or he'll make the 100 pips or more.
Mm. So he doesn't do a 30 or 300 pip stop loss. He just does a 10 or 100 pip trailing stop.
Yeah, with no TP, and he just either lets it run or he just
or he lets it get stopped out. Oh,
yeah, he lets it get stopped out. Yeah, so he almost always guarantees either a small loss, break even, or profit. So I don't know if that's something you want to try. I like doing it, but I feel like if I do that, I kind of just don't trust myself with the trade. And I like having the confidence and trusting the trade rather than, kind of giving it a chance type move.
Do you usually let them run when you're doing that 1 to 3? Do you let them, if it goes into drawdown, do you let it hit your stop loss, or do you normally close it out manually before it hits?
I usually let it hit my stop loss. If the trade loses, I just accept the loss because I'm like, okay. And then at that point, I just call it a day. I just stop trading for the day, or I'll come back maybe later, like you mentioned, halfway through the session, and then maybe try to take one more. But if I ever have two losses, I'm like done for the day. Usually, if just one, I'll be done for the day because I don't really, I feel like whenever I get into a loss, it really tests your trade psychology.
It really does. Yeah.
Because then at that point, you'll start to revenge trade, and that's like the worst possible. That's the
It's
worst.
crazy, man. What you can convince yourself of when you lose a trade of what you can convince yourself of taking more trades, and like I have this plan in my head, like, okay, no more trades after I lose one or two, but then I like convince myself like why it's a good idea to take another one, and it's like crazy what your brain can convince your brain of doing.
Yeah, no, definitely. And the thing is, like, if you follow the strategies where like all the requirements are met, typically it's not going to lose. So if it does lose, there's usually something up with the market. Like there's some sort of manipulation going on, or you're just like taking trades that aren't actually there. That's like one thing that I noticed too. Like whenever I'd FOMO into a trade, I would probably see like a variation type trade, like a V3, and then when I measure it, I'm like, oh, that wasn't even like a 300 pip stop loss, so it doesn't fit the requirements.
Mm-hmm.
Um,
Because that's kind of what I am doing the most of, or I'm trying to do is the variations, the V1, V2, and V3.
yeah, no, the V1s are probably the least accurate. The V2s are very accurate, but you'll never see them. You probably see them maybe once every week or once every couple of days. The V3s do come up very often, but they typically don't have that stop loss range that's required. And the reason for that's because of the lower volatility here during summer. Like when when you came up with that strategy was in the spring. So like we get a lot of entries with the V3s. We actually only applied it on the 5. We just started applying it on the 1 like more recently, I think around the time you joined. But if you look on the 5, that's not even a V3. Yeah, actually, they don't even come up here very often anymore either. It's just market conditions change. Sometimes you'll see them a lot more often. It's usually during a trending market, but since the market has been so choppy, it's been harder to see.
Do you try to take most of your trades in a trending market?
Yeah, typically. I don't like taking them during a range. Like for example, like something like this right here. It's like not a really good area to trade, even though there's a couple trades there. Yeah, I typically like trading well, it doesn't need to be trading heavily, but I want it to be out of a range. Because I mean, there's some entries here that looks like they would hit, but actually there's none. It's hard to find the V1s on the 5-minute. You don't really see them line up. 5-minute you'll typically see V3s. But yeah, I generally like to trade when the market's actually moving directional or once it breaks out of the range. Because
what do you think the most common types of trades you take are?
Typically, I think it depends. It depends on like what I'm looking for. So like if we're trading in the morning, typically like the variations are what I've been looking for. So basically the V1s or V3s. Sometimes the pivot scalps, depending on like where they're located. I think the pivot scalps are probably like one of the more riskier trades because price tends to go into a range and you don't really know it until it's too late. So I'm not sure if you noticed that, like for example, right here, this could have been good, but it was actually like in a range at that time. With this pivot scalp matched sell signal with a red trend meter. It would have been TP, and it would have been good, but I think during the trade, I probably would have been like, oh crap, it's actually in a range right here. I'm trying to look for a bad one here, but I don't really see any right here. I know there's a couple pivot scalps right here. This used to be one of the strategies that we used to always apply. When the market got choppy, it became a little bit more riskier because typically when you get these signals here on the 1 minute, the candles are usually a lot bigger than you want them to be because they fall under that red flag. If the candle's too big, you typically want to wait for it to retrace. And usually the signal candles are a lot bigger than the other ones. Like even looking at this one right here, this red candle right here is a lot bigger compared to this green one, and basically all these other green ones over here. But yeah, I was trying to find an example here where like I was like specifically looking for a bad trade, but these actually all hit. So I was looking for one that actually lost, but there wasn't any. I wouldn't have taken any of these buys here, even though we had the buys. The bias today this morning was a sell. So this one's right here. This is probably an example where it would have been a flop. 7:30. So right here, this looks like it could have been a good entry. However, looking closer, it's actually in a range. And the only reason I know that is by drawing the high lows right here. And it's kind of hard to tell because you don't really know if it's in a range or not until it actually pushes out further. But you can see here that it's in a range. And the thing that sucks about this is that price can really go either way when it's within a range. It can really go either way. So right here, price looks like it came down a little bit, reversed back up, and then completely reversed on you. So this is why typically I don't like trading in a range. It's kind of hard to tell sometimes unless you're following along. It's kind of easy for us during the live because I'm drawing all of the high lows as price continues to move along. But if you're not drawing all the high lows, you probably wouldn't see that that was a range right there.
What is your indicator that does the high, that draws the higher highs and lower highs? What is the requirement of that? Is it requiring there to be like a certain amount of candles in between the last one?
Yeah, basically. So basically, we're looking for price to establish a high, and I think you can even change the settings on here, or you can't anymore. But we had them on here because people would mess with them and then they screw it up, and then we just took it off, took off the option. But I think it was like 4 or 5 candles. So basically, you can count them in between. So like right here, here's the low. Yeah, like 1, 2, 3, 4, 5. Here's the high, 1, 2, 3, 4. Before I can establish another high, I don't know if we change the numbers to something lower, because there's a lot more high lows here. It wasn't always like this. And I'm not sure if you've noticed how like the indicator has been kind of screwed up lately, where it like, well, you probably saw this morning, like it would show like double labels here, or like the label wouldn't come up. You had to refresh the chart. There was like a data issue, I guess with currency.com. My brother who created the indicator mentioned that it worked for pretty much other data feeds. It was just currency.com that was having issues. And I'm not sure if you've seen it, but like sometimes there'll be a low established here and it'll like plot a bunch of different plots here.
I haven't really noticed that actually.
Yeah, a couple people showed it to me today and I was like, oh yeah, it's the same problem with me. But I think it was just a data feed issue. But yeah, basically these high lows, it's hard to really measure them here on the 1 minute, but if you go on the higher time frames, like say the 10-minute, it's kind of easier to see how they're kind of established a little wider.
Okay. And then what about the pivots? Are the pivots the same as basically like a smooth moving average?
Somewhat. So the pivots, one of the factors that we used when developing this indicator was moving averages, but we also incorporated a couple other factors too. So what happened was I used to have a bunch of indicators that I put on my chart. It was like moving average, it was exponential, simple. I forgot the other ones, and then a couple other things that move similar to the moving averages, and then we pretty much combine them into one code so that they would line up together. It would give the average of multiple different indicators, but it would create one line. Because I used to have like 10 lines on here. It was like a ribbon. And you've probably seen it before. I think there was a ribbon indicator too. I mean, there's a lot of ribbon indicators here that are kind of similar to what I created. But for me, I use what I specifically, not that one. There's a ton of indicators on here.
There is a ton of indicator.
Yeah, it was kind of similar to like, I guess kind of similar to this, but it was like more like indicators within it. It was, we just use different types of, not just moving averages, but we use different types of similar looking indicators and we combine them into one.
Okay.
Yeah, but moving average is one of the factors. So.
And then is momentum, I'm just asking to try to like in my mind figure out kind of how they're working a little bit more. Is momentum, are those kind of when RSIs are crossing? Is that when it prints momentum?
Somewhat. So this also uses the same, not the same, but kind of similar to what we did with the pivots, except they're, instead of it being lines, it was more of like a time when price was shifting above or below it. So like you mentioned, the RSI, it part RSI, part moving average, part I forgot what this other indicator was called, but there was like a bunch of indicators that I would use, and we basically just put them into one indicator. So yeah, the RSI is one factor.
Is your brother a trader?
Yeah, he's a trader, so he trades with us too sometimes.
Who's better, you or him?
He's not that good with like psychology. He could be good, but his psychology is not there. That's the thing. So he's good, but he just can't find the consistency. Like he'll do good, but then he'll also lose a lot more. Will end up being at break even at the end. He can't control his ability to pick out quality trades per se. So
well, I don't blame him. That is a difficult thing to do.
Yeah. So what he helps me most with is just making these indicators better, right? Because like, for example, I'll find something here and we're like, okay, what can we do differently to make this better or to make it more accurate? Uh, and that's basically what he does. Like he'll update these indicators, whenever we see market conditions change, just to make them more entwined with like how the market is currently moving. So he's
And
just,
so you guys both, these are all the indicators you do use. You don't use other ones outside of this.
yeah, that's pretty much it. It's all we use. Like with the momentum indicator here, this is like a combination of all my favorite indicators, like the RSI, the MACD. I forgot what the other ones were.
Stochastic RSI.
Yes, stochastic, fast and slow stochastic. It was like I used like so many indicators back then. So back then I would have like so many indicators down here, and then I'd have to line them all up to make sure that signal would come up. So instead of having all those indicators, I just kind of put it all together. So now we just have a signal instead of having like 5 different indicators on the chart at once.
So the trend indicator down at the bottom is probably like a combination of the MACDs.
Yes, that is correct. MACD, basically a bunch of different trend indicators. So what I did typically, but what I realized when I started to put my strategies together is like there's only so many things that you really need when you're identifying entries, right? Like you need to identify the trend. That's like one of the main things. So to do that, I picked out a handful of my favorite trend indicators, and then I put them together into one indicator basically, and that's how I created the trend meter down here. With the momentum indicator, a lot of people like trading moving average crossovers, right? I'm pretty sure you've seen that before, but you'll see that they're very inaccurate. So you'll see price, when price crosses moving averages, it happens very often. So I needed to use different crossover type indicators, like you mentioned, RSI, moving averages, stochastics, MACD as well, the oscillator, and a couple other ones. And I basically combine those together with my own specific settings to just give this one momentum signal. So basically it's just like a super indicator of everyone's favorite indicators, basically, to provide accuracy. Because the thing is, you'll see a lot of noise using them alone, but if you use these indicators in combination, you can find something that really works.
Cool, that's good to know.
Yeah, so a lot of this stuff is like whenever I call out trades and stuff and people are using different strategies, a lot of people will say, oh, he's just using this and that and the other. Like, well, yeah, I actually am, because we're using the same indicator. It's just mine's more accurate than yours, right? Because I'm using like a lot of different factors than what other people aren't.
Yeah.
And it's just all through testing. Like for me, it was all through testing. I tried out so many different indicators that worked for me and some that didn't. So I chose the ones that worked and put them together. And that's how we came up with these here.
Cool, that's good to know, because I had like some other indicators on my chart, like the ones we mentioned on top of these. And I was just wondering if that's just like confusing things too much. I figured yours are incorporating those other indicators already.
Yeah, I mean, if they don't confuse you, then you can use them. But for me, I like having a clean chart. Like before, my charts were so messy. It was like you couldn't see anything. Like you'd probably be better off without the candles and just like looking at all of the tools like crossing over and stuff, right? Which I would do sometimes too. Like I would just turn off the candles and I'm like, okay, if I turned off the high low. Like one strategy that I used to apply before with the pivots, and this is something that still works very well, is whenever these cross over, I don't know if you ever saw this pattern. Whenever these cross over and they start to align and spread out, it's like the beginning of a big trend. So like what I would do when I would take longer term trades is when I saw this, basically when the green was below, because this is the order, it's from green, yellow, orange, red. When I would see these cross right here, I would just take a sell and I pretty much just ride this thing down. And I would just keep moving my stop loss lower and lower as price would continue to move in profit without even looking at the candles. And This is how I would swing trade. I would just move my stop loss lower and lower. And if you turn on the candles here, you can see that you're actually able to, it kind of just takes away the what's it called? The nervousness, right? Because when you see the candles move around, you start to get nervous because you're like, oh crap, where's it gonna go? But if you're just looking at the lines here,
it takes a lot of the pressure. It feels different for sure.
Yeah. So I would do this, and sometimes I would change the candles to like the hike and ice sheet candles. I don't know if you've used those before.
I've seen them,
They're
but
Yeah, they're like smoother candles, so it's easier for you to follow through. And there's a ton of different ways to trade this way, but this is one way I used to trade in the past. I would for longer term trades, I'll just wait for them to cross over. Like for example, right here, I'd see them all cross over and spread out. You can take a buy there and pretty much just ride that up as well. And you can see how far, like with no stop loss and with no gain, just pretty much ride it up. And then move your stop loss up as soon as price would come back and reverse the other way right here. You would just switch it over and just take it the other way back down. So you'd already lock in this much profit. Right here, you get stopped out 940 pips, and then you just do the opposite way.
that's cool.
Yeah.
That's interesting.
Yeah, this is I mean, there's a ton of things that you can do with these indicators. That's why, like, for me, I basically teach people like the foundation, right? I show people how the indicators work, the basic strategies that I apply. But these indicators can be used for, I mean, whatever type of trading style that you want. I basically, the way that I create these indicators was to cover like all corners of trading. Like you need to identify the trend. So we have the trend here. We have the momentum indicator to identify, when to enter a trade. And then everything else on top of that is just extra. So like realistically, if you were just to take basic trades, like very basic trades matching trend meter with the momentum, you could take as many of these and you'd be profitable, right? Like you could take a lot of these trades here and just be profitable. The thing that I created, like when I created the sessions, the pivots, the high lows and stuff like that, that stuff was just on top to make things a little more accurate. Because like, over time I realized instead of taking like 100 trades, I'd rather just take one trade and be okay rather than taking like, 20, 50 trades. Because I used to take 20, 50 trades a day and it was stressful. Like I would be glued to my screen like at least, 12 hours a day. And it would take a toll on yourself. It's like the whole reason I got into trading was to work less. So that's why, I'm more so on the side of just taking one or two trades a day now versus.
Yeah, I like that.
Yeah. And from that point, you can always like increase your lot size, like you said before. Like, right now I'm pretty content with what I'm doing, but eventually if I do want to, step it up another level, I can always just increase my lot size. But everyone moves at a different pace. So like for me, I'd rather just stay where I'm at until I'm ready to move up from there.
That makes sense.
Yeah.
Cool. Well, Sean, I don't want to take up any more of your time. It's been super helpful.
Yeah, no problem. If there's any other questions you have or anything that you want me to cover, more specifically, feel free to let me know. I'll be back on live in a couple of minutes anyways for the group mentoring session. So if you want to hop on.
Yeah, I'm going to try to join some of those when I can.
Yeah, no, definitely. Yeah. But if you have any other questions, feel free to reach out. Otherwise, keep going along and stop remain consistent and try not to get greedy. Cause I know it's hard. It really is. It's easier said than done.
It's super hard. Yeah. And it's also, I'm just changing the trading time. Like I have this e-commerce company that takes a lot of my time, and consistently trading the same times a day has been challenging for me.
Yeah, no, and I agree. And it's all that's really about. It's like having a schedule. That's why for me, I just trade in the morning. And then after that, I start to look for other things as well to basically take up my time. So I don't have to lose the rest of my profits, trading during Asia.
Yeah, smart. And it drives, like, if I look throughout the day at the chart, like in between working and stuff, I make really bad decisions. I'm distracted by other stuff. And it does take a toll on me. The longer like I look at the chart each day, the more stressed out and anxious feeling I get,
Yeah, exactly. So I think it's best if you just focus on like maybe 1 or 2 hours a day, whether it be during our live session or midday, like how you were discussing.
Yeah.
If you want to do that, that's even better. Just find a group for yourself, right? There's no right or wrong time to trade. It's just really up to you, what you feel comfortable with.
Yeah, that's good advice. Cool, man. Well, thank you so much, and nice work with all this stuff that you're doing.
Yeah, definitely, man. Thanks. So I'll see you soon. And if you're on the mentoring session, I'll see you on there.
Okay. Thanks, Sean. Talk to you later.